Trading binary options was an incredibly tough challenge for me at first. I understood that it offered many opportunities to aim, but I kept falling short of my goals. I was overwhelmed by countless myths and bad advice, to the point where I began to think, maybe this isn't for me, maybe it's all pointless. Everything changed, however, when I identified the real problems and I made a few key adjustments. From that moment, I started generating real profits. It took me a lot of time, but in this short video, you will learn how to avoid the mistakes I made and fast track your success. I'm Thomas, and let's get started. Many people believe trading is a quick way to get rich, but let's be honest, expecting easy money is the biggest mistake most beginners make. I went through this myself. My first withdrawal came only after one burn through 134 deposits. Can you imagine? So I deposited money 134 times, guys, before I finally made my first profit. My experience taught me that without a systematic approach, you either lose everything or get stuck in a never-ending circle of random wins and losses. Now imagine two parts. One focuses on a structured approach, while the other chases instant results. The first is built on a solid strategy, risk control, and steady income growth. The second is a reckless pursuit of luck, where success is unpredictable. Which path do you think delivers the results in the long run? The answer is obvious. The most important question to ask yourself is, do I want a predictable source of income, or am I willing to gamble for random wins? Ask yourself that question. Your answer will determine not only your trading approach, but also your outcomes. Who can truly succeed in trading? Those who are ready to learn, follow a strategy, and commit to self-improvement. Take Javier, one of my students, as an example. He previously worked with several traders who promised him millions, but instead, he lost a substantial amount. Frustrated, he decided to study trading on his own, but struggled with discipline. Well, eventually, he found me and joined my team. We quickly identified that he had plenty of trading knowledge, but lacked structure and discipline. And with just a few tips and tweaks to his strategy, Javier started earning consistently and making regular withdrawals, guys. In conclusion, don't underestimate the importance of psychology and discipline in trading. Without them, you can't achieve stable results. Let's discuss technical analysis and what I changed in my strategy to start aiming consistently. Many traders love to follow trends, but let's bust this myth. While trends are undoubtedly important in trading, relying on them as the ultimate market indicator is a mistake. In practice, they don't always predict price movements accurately. Trends can be upward and downward or sideways even, and each type presents unique challenges. Sideways market movement is generally less volatile, so I recommend that less experienced traders start here. For example, there is a strategy called double stochastics, which I covered in detail in one of my videos. Be sure to check it out, of course. This strategy helps identify overbought and oversold moments. When both indicators cross the lower line, it's a sign that the price may rise. It sounds simple, but here's the catch: the market circle. If you ignore this factor, indicators can mislead you. For instance, on the chart you're looking at now, the indicators suggest a downward movement. But if you open a trade, you will lose money because you are going against the trend. Here is an important rule: avoid trading against the trend. The double stochastic strategy works best in sideways markets. Of course, this isn't the only strategy. Indicators like RSI, Bollinger Band, and stochastic oscillator are also helpful in understanding the market. But don't forget the importance of the market cycle, one of the key factors in market analysis. Markets constantly shift. Volatility alternates with calm periods, and growth phases are followed by declines. Ignoring these cycles can lead to losses. The takeaway is simple. Traders who overlook a comprehensive approach to analysis often have a limited understanding of the market and end up losing money. By combining trends, indicators, and market cycles, you dramatically increase your chances of success. So guys, let me show you two trades to demonstrate the stark difference between a beginner and a professional approach. Okay, so we will use the familiar double stochastic strategy, a beginner's perspective. We're looking at the EUR and ZD currency pair. So a beginner sees the upper lines crossing on the indicators, assumes it's a sell signal, and immediately enters the trade without further thought at all. Let's wait for the result. Loss, of course. So this is why many people claim the strategy doesn't work. Now, let's approach the same situation like a professional. Second trade, the professional's perspective analyzing the EUR/HUF currency pair. The indicators also suggest a potential price drop. Great, but for a professional, this isn't enough, guys. Additional analysis is crucial. So the indicators confirm a downward trend and there is a strong resistance level. The price has bounced off the level multiple times, and here is a clear downward trend aligned with expected movements. So only after comparative analysis do I decide to trade. The result, a confident profit. So you see the difference between a beginner and a professional approach, yeah? This is the level of analysis and confidence every trader strives for. So guys, the market offers countless opportunities every day, and every day you can earn money. The key is recognizing patterns, working with uptrends, downtrends, and sideways movements, and staying disciplined, guys. So if you enjoyed this video, give it a like and leave a comment about the challenges you faced. Check the link in the description and start your profitable trading journey with us. See you in the next video.